Good afternoon, traders. Jefferson Fosse here with Walls Trading. Happy Wednesday, everyone. It is December 17th. It's a couple minutes after 3:15 here in the afternoon. Welcome to my midweek commodity outlook. Please keep in mind futures trading does involve substantial amounts of risk. Certainly not suitable for all investors, traders, or producers. So let's take a look here at the markets, see what's going on here this week, what might happen here later this week, and yeah, let's take a look. Starting off here like we usually do here with this February live cattle here. It's down a $1.15 here today, 229 half. It's really been kind of sideways here the last 5 days. We did gap higher here last Thursday. Market jumped up pretty aggressively. That high there was 228.70. We got real close to filling that gap, 228.80 here on Monday's low, but we've really been sideways here for the past 5 days. Market's kind of run out of momentum. You do see the 100-day moving average. That's the white line here on our chart, kind of holding as resistance here over the past week or so. I don't think that's going to change here in the meantime. There is a cattle on feed report coming out Friday afternoon. Most of the estimates that I've seen, well, at the moment, the average estimates for about 98% on feed. Smaller cattle herd placements right around 90 to 91%. And marketing somewhere around 88%. So either way you cut it, if it comes in anywhere near that, I would expect that to be a bullish report and have a bullish reaction. We've got less cattle and more people to feed, but of course that'll come out after the close here on Friday. Won't be able to trade on that data and those numbers until Monday. Looking over here at feeder cattle, same kind of thing. They've really been sideways here. This is the January contract. Been sideways here for the last 5 days. They also gapped higher last Thursday. Feeders did fill the gap here on Monday. You had a kind of an equilibrium day, a day where we opened and closed almost at the same price. We opened at 340.17 that day, closed 339.92. Not quite, but very much an equilibrium day. Closed above the 100-day moving average here in feeders yesterday. Today we've come back right to it. Same thing here with feeders that I said in fats. I think the market's probably going to go sideways here throughout the end of the week and then probably jump again if we get a bullish report. You can still see these overhead gaps on the feeder chart that we've got to fill. Closest one here is to that October 24th low, and that is at 348.17. Would be a reasonable target. I expect them, we'll get up in the 350s here. And regardless of what the report says, my opinion is that we'll be higher here in cattle prices. Next year, we'll be setting new contract highs here again. Looking over to the hog market, down $1.77 here today for the February contract. 83 even is where we closed. Wrote a very nice bullish article here for the hog market yesterday, and of course it drops pretty dramatically here today. Still like this market from the long side here. There is some resistance here. We got to clear through this 100-day moving average. That's at 85.36 or so. 50 days giving us support. We've tested it a couple times, bounced off it on Monday, got real close to it here again today. That number's at 82.44. If we take out Monday's low, which was 82.40, if we take that out, then maybe we're going to retrace here some. If you like this market from the long side, I think that's where the protective stop should likely be, somewhere right around that 82-cent area even. Closing back underneath that 200-day moving average here today. We've been all over it and under it the last 5 days. Closed up above it last Thursday. Now we're down, closing below it here today here on Wednesday. Not a particularly strong sign, but it's midweek. There is going to be holiday trade, and I'll get to the holiday schedule here in just a moment. Looking at the corn market, March corn here today, 4 cents higher, 440 and a half. Been working its way lower here. Friday was down pretty good, down 5 3/4. Closing a penny lower here on Monday. Yesterday we were down about 3 cents. Today, big bullish engulfment. You can see where we opened up lower than the open here, or the close yesterday, and closed higher than yesterday's high. That's an engulfing pattern. Usually that's a pretty strong bullish sign for a market. Don't care if it's corn or if it's a stock or anything like that. Anytime you see this, that's usually a pretty bullish sign here. Also like the fact that we've hit that 100-day moving average. Should find some support here. Roughly where we were with the Thanksgiving lows is roughly where we're at with when we get back to the pre-Christmas lows here. Do think corn wants to go higher. Demand has been very good. Export inspections have been very good. We're still behind the eight ball. Won't get all caught up until the first week of January on where export sales actually are. And same thing with the commitment to traders report, but they are working hard to catch up on all those. Pretty strong bullish movement here today for the corn. Look for it to go higher, I would think. I'm not getting extraordinarily bullish on it. I think 450 here for the March is probably a reasonable target. I don't think we're going to get there here anytime soon. We do have holiday trade here next week. Next week on Wednesday, and this will be my last live stream here for the week, at least the one on Wednesdays that I do, because next week will be Christmas Eve. And the week after that will be New Year's Eve. The markets will all close early those 2 days. There will be no overnight trade here on next Wednesday night. No trade at all on Thursday because it's Christmas Day. The markets will open at their regular time on Friday morning. But yeah, I do like the corn market from the up to the long side here. I don't think there's anything really bearish fundamentally out there. We're not going to see any significant changes here in the yield or anything until we get the January WASDE report. And I do think corn market wants to bounce up a little bit. Looking at March soybeans rather than January. January is going to go on, or as March is becoming the front month there. Most of the volume and open interest has shifted there. That's why we're looking at March beans. They filled a gap here this week. Gap that we left way back in October 24th. The market gapped out, left a hole there to that 1076 area. Well, we got down there, filled that gap here, got close on Monday. We got 76 3/4, but they definitely filled it yesterday. Lower lows, lower highs here again today. Kind of a bearish day, not extraordinarily bearish, but still a bearish day. Bouncing off that 200-day moving average. If the market's going to find support, this is where it should find some support. Highest volume here, if you notice that on the soybean chart, that's what these indicators are right down here. Highest volume here today that we've had in January beans here, going back a little ways. Got to go back to a week ago. So even though we were down in the day, strong volume, not pushing to necessarily strong lows, and we're not finishing on the lows of the day. Bean market might be getting close to where it bounced from. See if that 200-day moving average at 1064 3/4 level holds. I think the problem with the soybean market is that everybody's waiting to see if China is still going to be a buyer. Well, this morning you had announcements, another 198,000 metric tons of soybeans going to China, and another 125,000 metric tons going to unknown. So I think China is stepping back up to the plate. Like, I don't know if they're going to hit the goals that they're supposed to, but they have been buyers here recently. And I think once all that filters through the export sales, we're going to start to see the bean market hook up a little bit. It's been working its way lower here for the last couple of weeks, certainly since we set that high before Thanksgiving here on the 18th of November. I think it's probably getting pretty close to being done going down. Market's extremely oversold. It's been that way here for all month pretty much, but expecting it to bounce here relatively soon. Soy meal, on the other hand, $4.20 lower here, $4.10 lower here. Let's get the right chart, the March up there. That market certainly did finish on its lows of the day here. You had an equilibrium day here yesterday. Opening close was just a tick apart there at 306 to 306.10. Got a directional close out of the soy meal here today, not only underneath yesterday's low, but also underneath that 100-day moving average. I don't think that's relatively supportive. I would think that the soy meal market is kind of indicating that it wants to keep going down from here. Market is very oversold as also, but volume was pretty high today. Pretty bearish day here for soy meal. I think that's posting some lower prices here ahead. Looking over to March bean oil. Big spike low today, getting awfully close to trend line support here. And this is just an easy line that I've drawn across the lows here. Just picked the low here, June 26th, connected it to the low here that we had November 3rd. Well, we got right down close to it here today. That trend line actually, I think, is 48.26. Today's low, 48.35. Finishing the upper, 10%, 20% of the range there. Basically back to where we started the overnight session here last night. I think this is a potential bottoming signal here for bean oil. You might notice when we've seen similar days like this, maybe September 23rd, or perhaps, equilibrium days like we had here in the middle of November. Went lower the next day, but back up off to the races after that. We're on trend line support. I think bean oil is a place where it can rally from. Stochastics is still very oversold, but you can notice, if you can see that on the chart there, they are starting to hook up a little bit. Perhaps the bean oil market wants to bounce. I wouldn't get extraordinarily bullish on here. Production has been extremely high, and bean oil stocks are extremely high for this time of year here as well. But we might run back up and just keep trading in this downward trending channel that we've had here since, well, middle of July is when that kind of firmly appeared. Like to get really, really bullish. I think short term we probably bounce and see the bean oil probably going to find some resistance up around that 52-cent area. Would be a nice little push higher from here, but I don't think it's got too much more than that ahead of it. Looking at the wheat market here, this is Chicago wheat. New contract lows here again today. Got to go all the way back on my chart. Yep, going all the way back to B, and these are new contract lows. Lower lows, lower highs. Chicago wheat finished down 3 1/4 here today at 506 1/4. Seemingly pretty heavy, but maybe it's losing some of its downside momentum. I think folks just generally like that big fat round even number of $5. Will probably, maybe I shouldn't say probably, but I expect to find support here once we get down to that big fat round even number. We may not even get there, but the wheat market still looks pretty heavy, oversold, and just turned that way. We did get it up out of the oversold territory here about a week or so ago, but weaker here still again since all 4 days since we had that one up day have been down. Wheat market does look heavy. Now KC wheat finished the day up 2 3/4 here at 507 3/4, not setting new lows, not get, we're getting close to the $5 mark here on KC wheat as well, but we're not anywhere near trend line. We're not setting new contract lows here for KC wheat. This is a minor kind of a reversal day here, at least to my eye, on the KC March chart. Probably getting ready to head back higher here a little bit. And keep an eye on that relationship. You watch the KC Chicago wheat spread. This is March to March. That jumped by 6 cents here today. This is the highest that spread's been at, going here back to the middle of August, right around the 19th. I think that's a relatively bullish sign for it. And a lot of times these spreads change directions before the market actually changes here as well. From the grains, we're going to go over to the soft markets here. March cotton, 36 cents higher here today, but new lows. Big bearish day here yesterday, down 84 cents. Today was up 36, kind of stayed inside day, stayed all fully within yesterday's range. Cotton market's been in a downtrend here for quite some time. We did set new lows here with yesterday's move, taking out the lows that we had here in November. That low there was 63.11. Yesterday's low was 62.97. So bouncing off a big fat round number, that 63-cent even. Might want to bounce up a little bit, but I don't know. I don't see anything a whole lot to be bullish about here for the cotton market. This market has been a downtrend here for quite some time. Looking over to the sugar market, 6 lower on the day, 14.76 is where March sugar finished. Kind of been hugging right along this 50-day moving average here for the past 4 sessions. Big nice update here last week to end the week, but given all those gains back here, Monday we were down 15 lower on Monday, 13 lower on Tuesday. Today another 6 lower. Also kind of losing some momentum here, but definitely does not have a bullish kind of a push for it. Got to get back and see a nice close above that 50-day moving average. I can make a bullish case. We're not revisiting lows. And if the market was really, really bearish, they would have set new lows here. We wouldn't have rallied up the way we did. But we made lows here back in early November, rallied up to the 50-day, pulled back, did not set new lows for the move. We've not set new highs for the move yet either. Sugar market looks a little sideways, looking like it needs a new direction, if you will. But the overall direction has been bearish, and that 50-day moving average is offering resistance, and that's at 1492. That's the green line on all my charts here that we're seeing. Looking over to the March coffee here, 347.20, down 490 on the day. This is the lowest close that we've had here since September 24th. Not a particularly strong sign. We're below that 100-day moving average. That's the white line. Tough to see because it's purple, but that the 200-day here is at 346.68. We're still just a little bit above that here right now. Didn't quite get there here with today's trade. Today's low is 346.75, so they almost got to the 200-day. Pretty bearish move here for coffee. Market Short-term averages turn to the bearish side here, December 5th. Would expect this market to continue to go down here. Don't see any real sign that it wants to turn itself around unless that 200-day moving average becomes support. Looking over here, March cocoa. It's been working its way up here for the past few weeks, but for this week, certainly it's been down. Monday was down pretty hard, down 403. A little bit of an update here on a turnaround Tuesday, up 122, but today we're down another 40. Market has been trying to rally, made a nice low here right before Thanksgiving, rallied up a little bit, did not set new highs for the move, did not take out the early November highs. To my eye, it looks like the cocoa market wants to kind of trade back lower. And it's been in a downtrend here for quite some time. You can see the 100 days been trending lower here. That's way up there at 66.04. 200 days up at 71.13. I think those are decent resistance levels and probably some decent levels to look to get short at if you are so inclined. Switching over to the metal markets, February gold, strong day up here today. It's about 43 bucks higher here at the moment. Doesn't close here, doesn't stop trading for another 28 minutes or so. Top of the hour is when that's going to stop. But this is going to be the highest close since we had the contract high close here on October 20th. Gold market looks very, very strong to my eye. Every time it dips back a little bit, uptrend continues. Now gold is not, and I do like this market from the long side. I think next year, maybe even this year, we still got a couple weeks left, but I expect 4,500, maybe even 5,000 or so if this trend continues on gold. Silver market, $3.28 higher. New contract highs for silver here today. Continues to stay very strong. It's actually outperformed gold here on a percentage basis this year in 2025. I do like this market from the long side. It seems like every little pause, every little dip, every time we test support like that 50-day moving average turns out to be a buying opportunity. Market looks very, very strong. Fundamentally speaking, we've got a little bit of a deficit as far as silver supply goes. And it is good. It's a good industrial metal that we do consume quite a bit of worldwide, but we're just at a deficit as far as production. And a lot of the ETFs lately that trade the metals, that's where we get a lot of stock market participation into the commodity markets. Those ETFs take that metal off the market. They put it in a vault. So that's going to further impede the supplies there as well. I do like silver from the long side. Market's very, very strong. Susceptible to profit taking any time, but here we are at $66.55 is right where we're trading at today, 322. I'm old enough to remember when everybody kind of lost their mind here just a few several weeks ago here when we cleared 50 bucks for the first time. Everybody thought, well, that's as high as it's ever going to get, but here we are, another $16.50 higher, and the market's not showing any signs of really wanting to slow down. Copper market, I also like this market from the long side. I think if the industrial revolution is not necessarily the right term that I want, but I think if this influx of manufacturing does come back into the States, I think we're going to start to see continued strong demand here for copper. Don't see this, it's not nearly as friendly or as cute and as pretty as gold and silver are, but the copper market still has a lot of upside potential to it. I like this market from the long side. It doesn't typically tend to make leaps and bounds, although we can see on this chart it does make a few, but it also kind of falls apart. This is when they pulled the tariffs off the raw copper here back in late July. The market's been working its way up ever since. We have not revisited those mid-July highs. I think that's kind of where copper market's headed. Looking over here to the March US dollar index. Now we just rolled from the December to the March contract here about a week ago is when you saw rollover kind of start and finish. We've been trading right around that 100-day moving average here in the US dollar ever since. Last 5 days, we've been pretty much sideways. We did have a big spike low here yesterday with the dollar getting down to 97.50 and a half. Yesterday's close 97.99, well off those lows. I think that's typically, you get a spike low like that, usually the market wants to reverse and go higher. Kind of what I'm expecting the US dollar to do here as well. Today, very, very small update, and we are finishing well off the highs. Somewhat concerning there. But I think ultimately we're going to see the dollar kind of hold support here and start to bounce higher from there. Looking over to the bond market here. Of course, interest rates got lowered here last week. Market's not really gone anywhere since then. Before the Fed meeting here when it started last Tuesday, where bonds were trading 115.06. Today they're at 115.09. So we really haven't gone anywhere. Market's trying to put in a little bit of a base right here. It's trying to consolidate here. It's having some trouble. Yesterday was a pretty bullish day here for it. You do have higher highs, higher lows here for it. I would have liked this more bullish here yesterday if we would have spiked lowered into a new low for the move and then recovered. But we have been working our way up here in the bond market all week. 10-year notes, my short-term averages to 5-10 day. They do hook over to the buy side here in the 10-year notes today. I think the 10-year notes are going to kind of stay in a trading range here. Look for them to go back. Currently we're at 112.15 half or so. I think the market's probably going to go up to about 113.24. Certainly I can see us putting another full handle on the 10-year note here before finding some significant resistance. Looking over toward the stock indexes, March S&P, my short-term averages flipped to the sell side here yesterday. Yesterday we were down 24.5. Today we're down almost 70 here at the moment. 69.75 is the last print I have. Market failed to make new highs. We made new highs here late in October. All-time highs actually. Settled back a little bit, made new lows for the move. Kind of tested against these October lows. On the subsequent rally back up, we did not set new highs. We've had 1, 2, 3 big bearish days here, 4 bearish days in a row now. Market's heading back toward that 100-day moving average, maybe even a little bit lower. I know folks like to talk about a Santa Claus rally, but doesn't look like we're going to get one this year. NASDAQ's down 436 here at the moment, still has about another 23 minutes before we close out here for the day. Short-term averages turn to the sell side there with Monday's trade. We're back below that 100-day moving average. Same thing with the NASDAQ. Did not make new highs on this next push up. That leads me to believe that we're probably going to take out those November lows here again. So I think stock indexes look a little bit weak right now. The Dow index, smallest basket we got, it's only 30 stocks. It's not that bearish. It's only down 190 or so here today, but you did have an equilibrium day here with Monday's trade, opening and closing almost at the same price, just what, 10-11 ticks difference. That's pretty much a textbook equilibrium day or a doji. Bearish directional close here yesterday, a little bit lower here today. We did make new highs in the Dow. But I do think that just like the rest of them, those 30 stocks want to roll back down here a little bit. Same thing in the Russell. Short-term averages are still on the bullish side, but they're this close to flipping over to the sell side. We've been working our way down here. Big bearish engulfment in the Russell on Friday. Lower movement here Monday, Tuesday, and again here today. They did try to rally it a little bit, but selling pressure ensued. And I think even though we made new highs in the Russell, I think we're probably going to go back and revisit, if not make new lows that we had here in November. And finally, finishing off with the energy markets here today. Crude's up a bunch today. It's up $1.56 here or so on the day. It's been working its way lower here for basically the last week and a half. Here 2 Fridays ago on December 5th, market closed at what, 58 or 59.78. Today we're trading 56.66. We set new lows for the move here yesterday. Got down to a level that we've not seen crude trade at. Got to go all the way back to what, September, October of 2021. So we made 4-year lows here in crude yesterday. I think today's activity is just a little bit of profit taking here. Same thing on unleaded gas. It's up a little over 3 cents or so here on the day. Big down day here yesterday. Dropped what? A little over a nickel, 5.15 cents lower. Today we're just getting right back into the middle of yesterday's range, kind of a little bit above that. I think this is just profit taking. The RBOB chart looks a lot heavier, I think, at least to my eye, and a lot more bearish, I think, than the crude chart does. Diesel, same kind of thing. Been working its way down here ever since we made highs here in the middle of November. This market has turned bearish. Didn't get as low here in diesel prices that we've seen RBOB get, and we saw crude get. A little bit of a bounce up here today, kind of holding off those lows that we had here in October. But all in all, the diesel market looks pretty heavy to my eye. I think today's activity, and if we're up, to finish off the week here, Thursday, Friday, I think that's just short-term profit taking here to my eye. Same thing here with natural gas. That's kind of fallen off a cliff here. We made highs here December 5th. That market was all the way up, what, 502? Today we're at 384, and this is a pretty strong update for it. 19 cents higher here in nat gas, but big pull down here over the last 10 days basically. Market seems very, very heavy to my eye. I think today's just a little bit of a profit taking bounce, maybe a little bit of colder temperatures here in the forecast. But either way I look at it, I don't know. Nat gas looks like it wants to keep getting lower and lower. I appreciate you guys listening. That's all I've got time for here today. If you have any questions, comments, please reach out. Let me know how I can help. If you think this information is useful, like this video, share it, get the word out there, start telling people here that we do these things here at Walsh Trading. I will not talk to you again, at least in this space, here with my weekly update until the first of the year. So everybody have a great Christmas and a happy and safe New Year's celebration. Talk to you guys later.